Well, that was disappointing that we missed the sell up at 51 and 75. That's just lack of focus. I'll have to think about over the next days, how to get focused to the level that we don't miss those opportunities. Now we're out of the market. Now the question is, where do we get back in? It'd be nice to get back in at a better price than 46.50. We're already over 46.50 now. D period has another 10 minutes or so to go, and then the E period opens up. The thing I don't like is there's a D and C period double bottom right here at the low at 45.50. So I still have a long bias in this market based on everything I'm looking at. Hope I didn't get scared out of that trade prematurely. Our stop was at 42, so we got out before our stop. That could be a problem. I've noticed I've been doing that the last couple of days. I need to think about that also. It's hard to find the right combination of flexibility and patience, and keeping your stops there, and so on and so forth. It's a combination that's challenging to get. We're going to get long to 47.25s here. Long 47. Our stop on the 47.25s is, let's see, let's put it, let's get my cursor here, pause the video for a second. 45, it's probably reasonable. If we go a little bit lower than 45 and we bounce back up, we can always get back in. 42 is the other alternative, which is significantly below us, below the B period low. If the E period opens up and wants to test the B period low, then our 42s become in jeopardy. So we'll put the stop at 45. That way, if the E period does test the B period low and runs the stops at 42, 43, we at least have an opportunity to make a decision and get back in before a better price than 45. Also, the 45.50 was the 76.4 Fibonacci retracement from the high. The 51s also, interestingly, not only being the LB period low, I missed this on the 10-day distribution, which was a balanced distribution. The lower limits of that distribution look to be right around the 51 area, 51.50, 51, 51 and a quarter. And, that having gapped down, breaking below the distribution, balanced distribution is technically defined as a breakout. And, upon retesting that breakout area, we're developing a little price node down here in the mid-40s. If we can't get back into that distribution above 51, I think this market's got some challenges. We'll see. I would expect then a lower close than the B period low, if that's the case. So our long at 47.25s might be in jeopardy here. But we have a relatively tight stop. That stop might be better served as a reverse. The C period definitely has a selling tail up there, and that's another concern. And we haven't broken out up here at all. The XLF is not leading the pack, it's just sort of consolidating like the S&P is. Both of those are concerns. The only interesting thing is the NYSE tick chart is developing higher lows, even though the majority of the trade is below the zero line. The moving average is moving up. So some conflicting data as always. We'll keep our stop at 45. I think that's the right thing to do. We're getting out of this trade at 48. I don't like this market action out. Now we'll just see, where this market wants to go to and see if there's any divergences. I'm not long, I'm not short. I hate to take a short here.
And I'd like to thank the McGills. Their bed was very comfortable last night. It was amazing. The best part about staying in a house here.
The opportunity to take the short was probably at the open of this bar, which was 48.75, a point above us.
See for yourself, and stay tuned here for Power Lunch. We'll tell you about how much corporations are spending on those tickets. Guys, back to you.
All right, Darren, thank you very much. Almost time for the last call. Final thoughts with Vince straight ahead here. Only on the call, only on CNBC.
We'll just stand by here for a minute. If I take a short here at 47.50, and we'll have to put a stop above us. And I got mixed emotions about this. There's definitely support underneath this. I'm just going to stand by. This is just in the middle here of the point of control. The range is too small. I'm not going to do anything here. Short 47. We're going to go short here and see if we can break below the D period low. Our stop on this trade is above the D period high here. Put the stop at 50.50. So the stops are closer than they normally are. I'm not sure what to think about that, but we'll try to stick by it. It's really a poor trade location. You know, the entry in this location in this trade should have been at the 48s, not at the 40, not at the 47. We couldn't get back to the 51s. That was a concern because that's where the breakout occurred. So we have the mindset now that the best thing to do is go with the breakout, with the gap below us as the target, before we get stopped out, of course.
And if they had tried to sell it now, I suspect they could get it done, yes. If you were to look away from the finance side, do you buy the strength in international? How do you interpret the weakness in healthcare? How do you interpret...
Well, we're finally moving in the right direction. If we can get under the B period low here, we're in good shape. The question is now, should, you know, we set an order to get out at the B period low right here at the 43s. I don't see anything that tells us to do that. We're building the lower NYSE tick. The XLF is, excuse me, in line with the E-mini S&P taking out the, excuse me, the intermediate higher low. So we'll stay with, excuse me, stay with the position here. Our stop is the same at 50-50, excuse me, 50-50. At some point we'll adjust the stop or just get out of the trade. The first target is, of course, the 8-period low of April 1st. That's down at 38. I think you could have a buy response at 38. So that's we'll see what happens there at 38. But they might want to close the gap all the way down to the end period high at 24. The end period high is 24. The actual close is 21 to change. So we'll stand and be as patient as we can, but try not to miss any opportunities. Sounds like a good combination. We're in between that mix. It'd be nice to eat lunch. Also want to show this chart. It's interesting. See, remember earlier we talked about how this was passive buying, sent the market higher. Look what happens when the price comes back. The inventory is completely removed. There's no inventory here. There's no willingness for these passive buyers to re-engage. So there's no volume, and it moves quickly below that. Now, what I typically look for is, you know, continued momentum, continued selling, and if we see, you know, some blue clusters or white clusters, that's an early warning sign. If you look at the April 1st volume and price chart, you'll see the 41, 42 area is this block. The block goes from about 40 and change to about 42 and change. Once you get through this block, then I don't see any more support until the gap. The G period just opened up. Well, we have a battle here. This is concerning, I think. I'm not even sure. It definitely a lot of volume though. I know one thing, the NYSE tick is building higher lows, but we're still trading predominantly under the zero line. And the XLF is doing the same as the E-mini S&P. There's really no major divergence there. So I guess it's just indicative of two-sided trade. We are below value. I think 38 is reasonable as a target. The 50% retracements all the way up at 45.50. The 61.8% retracements at 46.50, and of course 76.4% is 47.75. So, you know, plausibly there's a pretty good retracement that you can have and still be in the downtrend. We're out at 43. We're going to wait for a retracement to get back in. 43 out. We'll produce this nibble while we're waiting for a retracement, and I still think 38 is the target. We'll see what the retracement is. As a matter of fact, we won't produce this nibble. We'll just we have 45 seconds left. Oh, we're building volume here. We only ticked up just a little bit, and then it just died. That's the tough part of trying to, you know, get these retracement's timed just right. We had a big move down in the F period, so I'm expecting a little bit of a rotation up. The 45.50 is the first target for another short. We're going to take the 43 short. 43 couldn't get much higher, and we're up at the second standard deviation. That's always been a good sign. So we're back short 43, and our stops above us at 50.50. We'll produce video.